All right, we're live. So welcome back to Dapp University. So today we're going to talk about a lot. Lots happened since our live stream yesterday. But first thing I want to really talk about is why you need to be careful right now in the crypto markets. We've seen a lot of stuff absolutely explode over the past few days. Ethereum has hit a brand new all-time high as of yesterday. It's been on a tear lately. And lots of other altcoins are following suit. All right. But I'm going to talk about why you have to be careful even when things look like they're going well. All right. So we're talking about that a lot more. So before we get into that, if you're new around here, hey, I'm Gregory. And on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to become a blockchain master step by step from start to finish, then head on over to dappuniversity.com/bootcamp to get started today. So always, last but not least, not financial advice. Nothing I'm telling you in this video is designed to tell you to buy or sell any cryptocurrency. I hate these disclaimers, but there's also scammers down in the comment section below. Just ignore them. I'll never give you my phone number or ask you to invest with me. So we got lots of people jumping in the chat here. Culture Hives, DVNNY, not sure how you say that. Alec, Alan, JR, welcome. So let's jump into the first thing. So checking on what's happened with the cryptocurrency prices over the past several days and talk about why it's really important to exercise caution right now, especially for beginners who are entering into this space. Because it's really easy to jump in here and say like, hey, stuff has been on a tear lately. That's like the perfect time for me to get in, right? And like I said, I'm not, telling anybody to buy or sell based on any of this information. But I just want to talk about some of the psychology that happens a lot with beginners. Which is they see something went up and they see it as a strong buy signal, right? But that's usually the opposite of the case. And a lot of times when everybody's feeling optimistic and bullish in the crypto markets, like that's what I sense the market sentiment is right now. Sometimes that can be a really important time to take a step back and say, maybe I should think about this and do the exact opposite of what everybody else is doing. I'm not saying that's exactly what should happen. I'm not saying the crypto markets are going to crash or anything, but let's just take a look at what I mean. So let's check out the Dogecoin price here, right? So, Doge has gone on an absolute tear over the last 14 days, right? And really the last 180 days. I mean, I'm starting to see people on my other social media channels, which I keep pretty, non-crypto related. I'm starting to see lots of people talk about Doge and getting their friends into Doge and all this kind of stuff. And that starts to feel a little bit like these are just kind of some low-key top signals, especially if you've seen the type of things happen in the last bull run, like 2017. And the fact that Doge has done this, the fact that we're starting to see some cryptocurrencies just blast off for kind of no reason other than just sheer momentum. It's time to start maybe being a little bit cautious, okay? I'm not saying bull run is over. But this is the time beginners are going to think that this is the perfect time to buy, and that's really not true. The perfect time to buy is back here, I guess is the point I'm trying to say. I'm not saying you can't buy right now. I'm not saying that Doge isn't going to go to $1 or beyond, but it's not the perfect time to buy. So that's something to really careful about. We've got Elon Musk going on, I think it's going on SNL this weekend. There's kind of some rumors about this, being some sort of Doge pump that could go the exact opposite of what everybody thinks is going to happen. So that's something to definitely be careful about. Let's do the same thing for ETH. We've been talking about ETH doing really well. A lot of people who are ETH holders watch this channel. We've been kind of celebrating the victories for ETH. But you have to think about how ETH tends to trade, okay? It tends to get really boring for a long time, and then, it sort of explodes, right? We saw this happen. Boring, move, boring, move, right? Zoom out on the 180-day chart, you see this pattern over and over and over again, 1 year plus 5 year, whatever. ETH is very volatile in this case, right? So, we saw a big leg up here, which, this is the time that I would be careful. I mean, me personally, I'm an ETH holder. I've been holding for a long time. So I'm going to do basically what I've always done, which is just hold, do nothing. All right. It's not like I'm saying the bull run is over and I need to cash out my positions and go sit on the sidelines. But especially people who are new in the space, if you're sitting on the sidelines watching, I would just watch what happens over the next, 5 to 7 days. Maybe I'm wrong. Maybe we'd leg higher than that, but at some point, some stuff's going to correct a little bit. Of course, I think we're seeing a lot of people rotate out of ETH into other lower cap coins. ETH's gotten a pretty good return. And for everybody who's like looking for short-term opportunities, there's trying to play, like musical chairs and hop between cryptocurrencies, change lanes in the grocery store, so to speak. I think they're going to go down rotate into lower cap altcoins, try to get higher returns because of what ETH's done over the past several days. So those things to think about. Other thing to be cautious about is Bitcoin price. I talked about this yesterday, how, typically you don't see a top be totally flat like this over a 90-day period. I mean, you could basically just draw a straight line through this. But, we are seeing some consolidation here, but we're not seeing any real, volume move the price up like crazy. Which is something to keep in mind, right? We need that in order for a bear market to continue, a bull market to continue, especially in Bitcoin. And we could see the dynamics of this change over time, where maybe Bitcoin doesn't, lead the market quite like it was earlier this year. So we'll have to wait and see. And the whole point is to be cautious here. Okay, I think it's, almost every person I know who's gotten really successful in crypto is still cautious. Okay, you want to be basically a cautious risk taker. I mean, you have to take risks in order to succeed, but you always want to have a very healthy dose of caution. And typically a great time to exercise caution is after stuff is kind of like done really well, because crypto is so volatile, and kind of what goes up definitely comes down. Maybe just in the short term, but I see this happen to a lot of beginners. They buy after something amazing happened, and then price falls. And even if the price continues to go up after that, a lot of them get scared and sell, and then they lose money when if they just held on to it, they would have not. So if ranked beginners are looking for strategies about this, you can always dollar cost average. Like, don't lump sum buy everything all at one time. You can buy in small increments over time. Like, if you were going to spend $1,000 on crypto, you could take $250 and buy it over several days, several weeks, maybe even months, to break that up. Now, I mean, I don't know that it's a good idea to wait months, but that's the idea. So let's look at some other things that are great for ETH right now. So along with the Ethereum price, we are seeing an all-time high in the actual network activity. So I mentioned this in the live streams yesterday, but I want to bring it up again, which is we're seeing an all-time high in Ethereum transactions as well. So the use of the actual network. And talking about some models where this actually has some sort of correlation with the price of Ether itself. So this is the daily transactions that happen on Ethereum networks. Anytime somebody sends cryptocurrency around, anytime somebody interacts with a smart contract, they create a transaction on the blockchain. Anytime you trade on Uniswap, move a token between wallets, and we see the current transactions per day here as let's see here. I can't actually see the count. 1.5 million. Okay, so this is past the 2017 all-time high. We kind of dipped below our previous all-time here, but this headed up. But there's actually, some models that talk about the price of Ethereum based on the number of transactions, but particularly the number of active addresses. So as the number of active addresses goes up, if you subscribe to the sort of thesis of Metcalfe's law, applying that to cryptocurrency prices, you will see a exponential correlation between exponential relationship between the number of active addresses and the price. Okay, so we're seeing that model, for the Bitcoin price as well as Ether, other cryptocurrencies, particularly layer ones. And I think we're seeing that play out in real time here. I mean, we're seeing more and more people use the Ethereum network, the price, increasing in a exponential way. It's outperformed Bitcoin over the past year. We're seeing that also apply to other smaller cap cryptocurrencies as well. But it's interesting to see that data actually play out in real time and track the number of transactions, number of active addresses. I don't know if you know if Etherscan tracks the active addresses. We can look at some of our on-chain metrics. So speaking of which, let's actually check some on-chain metrics here and see what they're saying for the overall health of the cryptocurrency markets. Okay, so our current Nupal metric for Bitcoin is 0.65. So we haven't made any significant changes over the past couple weeks. right? We're still in relatively the same terms. I guess that makes sense because, I mean, not a lot's happened in the Bitcoin price over the past couple weeks. I mean, like I said, if we look here, even over the 90-day, Bitcoin looks like you could draw a straight line through it. Now, there's significant amount of volatility over that time period, right? I mean, we were as low as $38,000 and as high as $64,000, right? So that's a significant spread. But the mean or even the median, you could just draw a straight line through. And so we're seeing a similar type of thing kind of play out here. And over the past week or so, it's just sort of sideways chop. We've oscillated from new bull value of 0.6 to 0.65. So anyways, this is still bullish to me. We got plenty of headroom to rise before we hit euphoria. That being said, we are seeing other signs of significant retail interest, in cryptocurrencies. And we talked about this in 2017, where these bull markets are fundamentally different. Because we have a different set of participants buying in size. So in the last bull market, it was basically retail driven in the sense of people like you or I who get on the web. I'm gonna go to Google and say, how do I buy Bitcoin? Like those Google searches leading them to cryptocurrency exchanges, hearing about Bitcoin, and then buying that way. That's like basically what drove the retail mania of 2017. And then, this time around, we have institutional participation. We got people like Tesla buying $1.5 billion of Bitcoin. We've got, MicroStrategy, lots more. Okay. They can buy in size in a different way. So that's a different, dynamic in the market. But retail participation still matters. And one of the reasons that retail participation still matters is they're typically the jumpiest in terms of the price moving around so fast. They're also probably the least responsible with leverage, right? So you get people go trade on exchanges where they let them use crazy leverage. That's why you see these leverage bubbles blow up over the weekend. That happens a lot because crypto trades 24/7. On weekends, you see the cost of leverage go up. You can go back through my YouTube channel and see how many Monday videos are what happened? Crypto blew up. It's because people go nuts on the weekends. So anyways, we're seeing more and more sort of signs here that retail participation is going up. So we actually saw this analysis here from the block here. So he's saying this chart thinks that this chart is a good indication of where retail participation is. So basically, these are new weekly followers of crypto exchanges for Twitter. So basically, any of these, let's see here, it's Bitstamp, Bitfinex, Kraken, Binance, and Coinbase. And we see the spike in Twitter interest in 2017 and how those spikes are now larger here. And we see, the rise. So it's less, it kind of mirrors what's happened a lot with some of the cryptocurrency prices, because you can see in 2017, this was the hockey stick leg of things. And this is still looks like it's kind of growing. I mean, it's not this part of it's the speed of the rise, right? This is a really fast rise, and this is still a pretty fast rise, but it's not quite as hockey stick looking as this one is. Now, I very well expect that this run can support more people, right, than the last one, simply because of the market caps where we started from. I mean, Bitcoin started at $10,000 basically. I mean, it dumped to about $5,000 in March of last year, but let's consider that an outlier and say Bitcoin is basically around $10,000. That was the starting point. I mean, the starting point before was, a lot lower. I think beginning of 2017, if I remember correctly, the Bitcoin price is about $1,000. So it stands to reason that we could support a lot more than this last run. And we're starting to see that where we could have the same amount of retail participants as last time, especially with the institutions here, and sort of be at this level and not be at a top. But this is definitely something to watch out for, because we talk about this, there's kind of two perspectives on this big cryptocurrency that's happened over the past year. It's either that we're in a super cycle phase of things, we're in a much longer upward trajectory of crypto, that we're seeing actual adoption, that we're seeing, more long-term holders, more use cases to hold on to the cryptocurrency and do things with it, institutions holding it, et cetera, and that that will likely see some volatility, but we won't see a massive boom and bust cycle like we did last time. That's one way of looking at it. Now, the other way of looking at it is that history will basically repeat itself, maybe not perfectly, but it'll rhyme. And that we'll be in a boom bust cycle where we'll see some big parabolic blow off top like we saw here. And that, we'll return to a multi-year bear market following. So, nobody knows for sure what's going to happen. I subscribe to number 2 because it's the safest assumption to make. It's also the most likely assumption because human nature doesn't change that much. Like, I'm just assuming that we're going to go into a, boom and bust cycle where we have some sort of parabolic blow off top. And then we enter into a multi-year bear market, mostly because that's the best thing to be prepared for, and then adjust your thesis as it doesn't look like that if we actually enter into scenario number 1. Now, I'll be very happy if we're in scenario number 1, but I think retail participation is definitely something to watch out for. That's why I bring it up. So another big thing, we talked about Uniswap launching yesterday on the Ethereum network. We kind of say, hey, watch out for this. This is going to be big. So it's live. You can go swap on Uniswap version 3 right now. Let's see. I had a tweet here pulled up. See if I can find it. So if you go to the Uniswap website and you actually use version 3 right now, or if you actually just use the app that's listed here, this is Uniswap version 3. So one thing to definitely check out for is you want to make sure that if I'm actually just connected to the Rinkeby network here, but if you want to actually swap on Uniswap with the pairs, especially early on, you want to make sure you've got enough liquidity and you don't see like crazy amount of slippage. Now that being said, for popular pairs, I think this will probably be fine. But you can just see the slippage here if you're entering your token. Just make sure it's not too much. But we are seeing reduced slippage already on popular pairs because of the capital efficiency improvements with Uniswap, which is a huge deal. I mean, on some pairs, I think you can already like swap like millions of dollars with hardly any slippage, which is amazing. Now, this being said, this does not have the feature that I'm most excited about for Uniswap version 3 yet, which is the layer 2 scaling solution. So we're not there yet. I don't have a firm announcement on when that's going to be, so I'm going to, just keep watching for that. But I do still stick my prediction, but that we're going to see wide adoption of layer 2 scaling solutions in 2021. And we're on good track to doing that. So anyways, if you haven't checked out Uniswap version 3, go ahead and do that. So we're seeing, more and more coverage of cryptocurrencies on major media news outlets. I saw an interview on CNBC yesterday. I think it was Gary Tan who was there talking about ETH, talking about a lot of crazy stuff. We're seeing, Bloomberg Crypto talk about, do you want Bitcoin or Ether? I think we're seeing a lot of people turn their attention towards Ether because they see a higher upside potential, especially from kind of smarter investors who are wanting to buy more, I guess, quote unquote quality stuff that's been around for a long time, institutional folks as well. So we're seeing more and more of that. I think this drives a lot of the retail mania too. But yeah, I mean, this is, like I said, this is stuff that we saw it in 2017. It would have been absolutely crazy. And it's kind of becoming more and more commonplace now. And new people will basically sort of just take it for granted and say, oh, this is normal. People talk about crypto all the time everywhere. It's like, yeah, not really. All right, so we got some questions in the chat here. Somebody says, why is ETC pumping? It's about Ethereum Classic. It's a good question. I think we're just in that. I think there's a couple possible explanations. One explanation is that we're kind of just in that phase where people start looking for cryptocurrencies that are farther down the list in terms of market cap and just entering in them and waiting for them to pump. Because pretty much everybody is like kind of taking their turn. Like we're gonna go like get on this lane for a while, then we're gonna go jump into this lane because it hasn't moved yet. And that happens with traders. But Ethereum Classic in particular, I think there's gonna be some bias, especially for new people, that it's like the cheap version of Ethereum. You know what I mean? Like you see this unit bias, that's what this means. You see a low price and they're like, oh, that means it could be as expensive as Ethereum one day. But they don't actually realize what's going on with the network itself. That it's definitely not anywhere nearly as widely used as something like Ethereum. You have to watch out for unit bias for sure. Now, it's not so much unit bias with Ethereum Classic because they have very similar tokenomics underneath the hood. But you have to look at for unit bias in other cryptocurrencies. So you definitely see it with like Dogecoin, XRP, Cardano, Polkadot. What is unit bias? So basically, you're buying a cryptocurrency because it looks cheap, and then you compare it to like Bitcoin, and you say, "Oh man, Cardano's 163, and it could like bazillion X and be as expensive as Ethereum, but that totally discounts the market cap." Okay, you have to like the market cap is the total supply times the unit price. So this is unit bias, is basically saying I'm buying this because it's cheap. So unit bias is a common thing. It's not just applied to cryptocurrencies. You can think about it like, you experience unit bias like if you're sitting down to work and you're like looking at a clock and it's 11:45 a.m. Well, let's put it this way. You sit down to work at noon and you have a task to do and you slate out an hour, okay? And you say, well, I'm going to do this and it's got to be finished by 1. The task might only take you like 25 minutes to actually complete, but you give it the entire hour because you have unit bias and it's supposed to take a whole hour. Or like, let's say you buy a large, soft drink at a restaurant or something. Like you don't have to drink the whole thing, but your unit bias like not makes you, but it influences you to do it. So the same is true for cryptocurrencies. You have unit bias for smaller cryptocurrencies. Some people say, I don't want to buy Bitcoin because it's too expensive. You don't have to buy a whole Bitcoin. Same is true for Ether. I can't buy an Ether because it's too expensive. Somebody says, where are my NEO holders? I remember when NEO was hot back in 2017. Somebody says, Doge will drop with a vengeance and toil will be left without. Yeah, I think it's very likely that Doge will. I think Doge will end in tears for many. Unfortunately, I think that's the sad truth. If you take Doge for what it is, as kind of like a fun thing, and you don't put in more than you can afford to lose, I think that's how to do Doge right. But I do think Doge is going to end in tears for lots of people. It's like it's not really funny, but it kind of is at the same time. Somebody says, would you suggest learning Solidity exclusively or learning React.js and Web3 alongside Solidity? So I would learn the thing that you need to learn the most. If you want to become a smart contract developer, then I would definitely just start with Solidity and learn everything else as you go. But that being said, I mean, you can learn like Web3.js for sure, just to write basic scripts to talk to your Solidity smart contracts. But I think being able to develop front-end applications that talk to your Solidity smart contracts is also really important. I mean, you can learn them all at the same time, but I would focus on the actual blockchain knowledge as the most important piece of that puzzle, which is Solidity. Somebody says Doge will not drop. I think Doge will keep going from here. I think Doge can hit $1 based on sheer momentum. It's not financial advice. I'm telling you to buy Doge. I don't hold any Doge. I'm not going to go in and buy Doge right now, but I do think it can happen. Let's see here. Somebody says Matic going to 9 or 10. Let me just see how Matic is doing, actually. So we're seeing a lot of growth in Matic and the Polygon network. So if anybody wants to know what this is, I've talked about lots of my streams here. Basically, it's they're branding themselves as trying to help the Ethereum scaling pains for now, for sure. Rebranded Polygon, previously Matic. You got a great sidechain solution going on here. About 78 cents. Somebody says $9 or $10, maybe. All right, I just talked about Ethereum Classic, so you can go check out the replay. Safemoon. What happened to Safemoon? Let me go look at it. I remember watching the prices absolutely tank. This is almost not Safemoon. Let me just pull it up. So I hope everybody knows, like, when I laugh at crazy like cryptocurrency price is absolutely tanking, it's I true genuinely feel bad for people like who got into these things, who, you know, didn't know any better, you know what I mean, and lost a lot of money. But sometimes it's just like funny because it's like, wait, everybody kind of knew, like, you know, we were talking about it. See, Safemoon, it's actually not doing as bad as I was thinking. Let's just take a look here. So basically, part of it, it's like when you see something do this, it's like don't buy here, like just don't do it. And then we saw this happen like instantly, and I was like, oh gosh. But it looks like we've had some recovery. You know, it's gotten some chop. It's looking, you know, maybe this is the J curve. I don't know. I'm not touching Safemoon. I'll put it that way. I don't really trade a lot of cryptocurrencies, so I mean, I haven't really bought any new crypto since January. You know, I have my cryptocurrency investing is a pretty passive activity here. And I wasn't even planning on buying any crypto in January. I just saw a massive opportunity after the prices dumped to jump in. You know, before then, I don't think I'd bought any crypto since like August, maybe. So I'm a pretty infrequent buyer. Oh, the chat is moving fast. So what are the best ways to practice blockchain programming? That's a great question. So first and foremost, you want to make sure you're doing guided tutorials if you're brand new. Go check out my YouTube homepage. You can find my free courses there, you know, like Udemy courses, but they're totally free. So you definitely want to do a guided tutorial first, especially if you're brand new. But once you finish that, and you feel like your skills are solidifying, what you definitely want to do is build something unguided. So think about something you want to build and try to solve the problem with code. And then you're going to bump into walls and feel pain and try to Google your way out of it and try to ask other people like how to solve it. And that's how you learn. That's how you actually develop real world software development skills, by like going through pain, basically. I know that doesn't sound fun, but it is. Like when you're excited about what you're learning and you're like, oh, it's challenging, it's cool. You know, it's like, it's sort of like, it's like anything else, you know, no pain, no gain. Okay, this is getting kind of crazy. Sorry, if you spam the chat, I will hide you. Okay, so let's see here. Sorry. All right, I'm putting you in timeout. Sorry. So what language did you recommend to start out in Dapp development? Definitely Solidity, then JavaScript or Python. So VChain, Anchor, Vet. Yeah, I don't have thoughts on all these. Hammer time. So it looks like ETH's pushing back up now, actually. Let's take a look here. We're at 35.11. We might break a new all-time high. But I definitely do think it is time to be cautious, because especially on the short term. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so more people learn about blockchain. You know, if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, like I was talking about a minute ago, you go to my YouTube homepage, you can find any of my free courses there. They're like Udemy courses, but they're totally free. And if you like those, you went to the next step, or hey, maybe you want to take a master shortcut entirely, I'll show you become a blockchain master step by step from start to finish over at dappuniversity.com/bootcamp. All right. You don't have to be an expert to get started today. Help people with zero coding experience become real world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching Dapp University.